Good morning, everyone, and thank you for joining me in today's daily market review. It's the 11th of February 2021, and this is Mohanad Yaoud, Head of Market Research at CJC Markets in the MENA region. Let's have a quick look on the charts to know what we are expecting throughout the day, so please stay tuned. Welcome back, everyone, and let's start our day by having a quick look on the US dollar index, which is basically trading in the lowest prices since 2 weeks now. Yesterday we have managed to reach the level of 90.25 points. It's moving in a sideways range at the moment, but basically I can see that there are some the bullish control is still over the dollar index, especially after breaking below this small trend line and creating a lower low than the previous one. So basically we are bearish on the dollar index on the shorter term. However, we need to watch this level of 90.48 throughout the day. As long as we are trading below this level, we are still bearish on the dollar index on or for today, and we should be targeting 90.11 throughout the day. However, any confirmed break above 90.48 should negate the bearishness during the day, and we will be bullish on the day to target 90.67. But to me, basically this is the lower probable scenario, so we will be bearish on the dollar index until proven otherwise. On the euro dollar, we are still basically trading above the level that we highlighted throughout the day, which is 1.2110 throughout the week, we are still moving in a sideways range. We are still bullish on the euro dollar. However, because it's moving in a sideways manner, we need a confirmed break above this level, which is 1.2145. Any confirmed break above should be continuing our bullish move to the upside, again to target our key level of 1.2189. So we are bullish also on the euro dollar. We are still having our same technical view. However, we need a confirmed break above this sideways move in order to be long on the euro dollar. Regarding the pound dollar, it's somehow moving in a better manner. It's moving to the upside, although it's a weak move. However, we can see it's creating some higher highs. Our key level for today on the pound dollar should be 1.3820, and the move to the upside is 1.3866. We might be trading in a sideways move today on the pound dollar. However, any break above 1.3866 should be bullish on the pound dollars to continue our move to the upside. And on the other opposite scenario, we managed to break below 1.3820, we will be bearish on the very short term on the pound versus the US dollar. The dollar yen is still moving in the same way that we expected. Basically, it had an upward correction yesterday, and it's right now trying to continue the move to the downside, although it's a very weak move. However, we are expecting this move to be faster throughout the day, especially by the US session opening. Our key level for today should be this one, which is the high that we did create yesterday, 104.84. As long as we're trading below this level, we are still bearish on the dollar yen, and our target should be 104.16 to the downside. Any confirmed break above this level, which is 104.84, we will be bullish on the very short term on the dollar yen before continuing the move to the downside one more time. Let's have a look on gold trading, which basically did nothing since yesterday. It's moving in a sideways range. Our key level that we did highlight yesterday was 1832.30. We were waiting for a break below this important zone so we can be fully bearish on the gold trading. It didn't. We had a move to the upside to retest the downward sloping channel line that we did draw on the daily time frame. That was the test that we had yesterday. As we mentioned, this is a cluster of resistance points. It's a very key zone, so we don't expect gold trading to be going higher above this level. It needs a lot of buying pressure. So we are still bearish on gold trading. However, again, we are watching this key level of 1832.30. Once we have a confirmed break below, we will be bearish on the gold trading on the shorter term. And this is basically the levels that we're watching for. We're expecting something like this on gold trading, a move to the downside, a retest, and off we go to the downside. However, we need to watch this happen first. A break, a close with a full candle below 1832.28, and then a retest to the same zone, a successful retest, and then off we go south of the chart. Let's have another look on the US oil. Basically, we had brilliant numbers of the US crude oil inventories yesterday. We had a reduction of around 6.6 million barrels during the last week. So we're expecting more bullishness on the US oil, especially after some announcements made from OPEC members that in the next month meeting, we are expecting the same output cuts to be held around the same levels. So we're expecting higher levels on the US oil. However, during the day, we are watching those two important levels because basically it's moving in a sideways range. We will be waiting for either a break to the upside above 58.88, which should take us to our target of 59.61. Again, we will be waiting for a confirmed break above this zone, which basically succeeded in resisting the price during the couple of days. Okay, here we go. This is the zone that we need a confirmed break above. Any confirmed break above this 58.89 cluster should continue the move to the upside. On the opposite side, any confirmed break below this one, 58.07 points roughly, we will be bearish on the US oil on the very short term. The last thing we have is the Dow Jones index. We're basically still bullish in the Dow Jones index. It looks pretty good. We did have a trial to break below this upward channel on the 30 minutes time frame. That was yesterday. However, we can see that the buyers supported the price and we closed above this level one more time. Our two key levels for the day, or basically one key level, is this zone. As long as we're trading above 31,350 points, we are bullish on the Dow Jones to move upwards north and to have higher new all-time highs. However, any confirmed break below 31,350, that's our key support for this upward move. We will be having a move to the downside, but this is the worst or the lower probability scenario if it happened. So that was all for today's video. Thank you very much for watching this daily market review. Stay tuned for tomorrow, the 12th of February. Once again, that was Mohamed Yaoud, Head of Market Research at CJC Markets in the MENA region. Thank you and please stay safe.
CJC Markets is a leading global financial institution that has granted a derivatives issuer license issued by the Financial Markets Authority New Zealand. CJC Markets has a wide range of products, latest technology platform, and eminent customer service. CJC Markets offers superior execution, competitive spreads, and low transaction costs. CJC Markets. Smart trading, smart life.